This is our Forex blog for February 10th, 2011. And like we do most days, we look at the currency meter first, get an idea of what's going on. Most of us trade the dollar and yen against the currencies on the bottom. And so you can see last night the daily and weekly trend shifted up in the dollar. We had some real-time strength, which pretty much lasted the entire day, and the weekly trend became very strong as of about 3 in the morning. The yen was extremely weak, daily, weekly, and monthly trends down, and you can see a couple hours of counter trend strength followed by some extreme weakness here at 7. So at 7 o'clock we can trade this against one of the stronger pairs. The dollar's weekly, monthly trends up, so you'd want to buy the dollar yen. You'd also want to buy the pound yen, and you can see at 8 the CAD's daily trend was up, and it had quite a lot of strength right here, so the CAD yen after 8 o'clock would be a good buy. Let's look at the pound yen first. Here's 7 o'clock when it showed up on our currency meter, and you can see it broke out over the previous day's high. More than likely you would have got into this trade and got stopped out here as it pulled back before the trend eventually came back up. And so when it broke out again, you'd get in again. You may have lost 10 or 12 pips on the first trade, and you got in again. And you can see the market went up to our upper containment band without a whole lot of strength. The daily, weekly, monthly trend is, however, extremely strong. I would have personally got out as the market went sideways right here, because oftentimes it gets pulled back, you can get in again, or in this case it goes sideways for 30 minutes to an hour and you buy the breakout again. You get in here and the market went to the upper containment band. I probably would have got out of half my trade there. What I typically do is put my stops underneath little minor pullbacks, and at that point you want to draw your fibs on the swing and get an idea of where the fib targets are. This is the overnight predicted Fibonacci profit target I did last night, and any of these levels that's way beyond our upper containment band is very likely to be the end of the move. So I would have got out of the first half of this breakout right here when it went sideways at the monthly pivot, and then when it exploded up, got out of the second half right here at my overnight fib target, which is also right near the intraday real-time fib targets. Dollar yen, 7 o'clock right here. We got major resistance right above it, so you should really kind of wait for that level to get broken. The next area is our trading zones, which is again way above the upper containment band, and so I would have bought right here at 83, and it kind of went up a little bit and kind of pulled back. I probably would have got out of the trade right here once it started pulling back. We have extreme strength right here, very close to the dotted 20 line, which is a sign of extreme strength, and you might have bought this pullback right here. This is the type of trade I do. This is the profit target. It's about 15 pips away. You're going to risk about 7 pips on this. You put your stop a pip or two underneath the low here. So it's worth taking a trade after having the most strength of the entire day. In fact, the most strength of probably 24-hour period. If looking back, the daily, weekly, monthly trends up. The dollar is one of the strongest pairs, and it has been since about 3 in the morning. And the yen is the weakest, and so you got out of the second trade up here. Notice it made a higher high with less strength. That's a big sign that the market's very likely to stall and reverse. And I don't typically like to trade the dollar yen, so when a currency like the dollar yen's above the upper containment band, I almost never buy it. This one pulled back, right near the containment band. The dollar yen frequently is choppy, so I typically don't like it myself. Let's look at some other options you had today. Later in the day, the New Zealand became extremely weak. The dollar was strong, and so again you could look to sell the New Zealand dollar. Look at this coming up to 13 o'clock. The price is underneath the hourly moving average, breaks down right here, falls about 40 pips. Also some really good trades earlier in the night. We have 2 narrow range patterns on this, and our rule is simple. Anytime a narrow range pattern happens, you want to sell the breakdown of the low if it's underneath the hourly. In other words, if this was way up here, you don't want to sell, you only want to buy breakouts. But when a lot of times these narrow range patterns happen right at the hourly, and if it breaks out above, price is automatically above the hourly, the gray line in the middle. In this case, it broke down right here, and it started falling. You might have got out of this trade with about a 15 pip profit right here. There wasn't a whole lot of momentum. Usually deep pullbacks like this are a good place to go short again. Fibonacci level last night acted as support twice, penetrated it the third time, but last night this was a pretty decent currency to trade. You can also see extreme weakness here in the Swiss. So in addition to buying the pound yen coming up to around 830, you could have also bought the pound Swiss. Let's type this in here and notice, again, 830 is here. The market's kind of chopping around. Here we have a weekly pivot, previous day's high, and trading zones up here that are likely to be areas of profit targets. And so you might have bought that little pullback right here. Usually I don't want to buy the high unless the market's been going sideways up there for half an hour. So you might have gotten into that pullback. Here you can see it was one of the strongest currencies. So, you got to know when it's okay to break rules. And anytime you see extreme strength, if it's just really close to the upper containment band, give it a shot. Draw your fibs on the last swing to get an idea of where your profit target is. It's up here at 012, 5612. And you can see the price stopped pretty much to the pip right at that level. You bought this currency here at around 51, and it's a 60 pip move. Or if you got out the first time it came right here, not bad also. Looking back on this, we have a lot of strength here again in the CAD. CAD yen also would have been a good one to buy earlier today. And notice anytime you see any currency that's above the hourly moving average and pretty much in a very tight sideways narrow range move, the Fibonacci retracement level acted as support. So anytime you see buying at an area where there's likely to be buying, and you can see the daily, weekly, monthly trends just barely up, not super strong, but pretty high probability trade. This would have been your first profit target. This is your second. I would have exited half my trade here because it looked like it went sideways, and then draw my fibs on that first wave to get an idea of where the next profit target is. So somewhere between the first and second fib target, I would have exited the second half of the trade. So out at, let's say, 40 on the second half, 20 on the first half, in this trade right here around 02. So we made 20 and 40, averaging to 30 pips on that trade. And again, notice the extreme strength. You might have bought this little pullback right here. It came back inside the range. Most of the time, price does not go above the upper containment band. And anytime you see it go higher with less momentum than it had before, it's a pretty good sign of, just take your 10 or 15 or 20 pips, whatever you're lucky enough to get, even if it's 6 pips. The market kind of runs out of steam with, half or less momentum. You want to get out of the trade.